Hello and welcome to another Smaulgld live stream. It is Sunday evening, the 9th of June, 2019, and it is Solid Gold Sunday with Smaulgld. And Sunday evenings we discuss just gold, just as on Saturday we have Saturday Night Silver with Smaulgld and we discuss just silver, and Friday we do just cryptocurrencies on Friday Night Crypto with Smaulgld. Tonight we're going to take a look at gold in foreign currencies, the price of gold in foreign currencies. Last night we looked at silver in foreign currencies and we saw that silver has not fared well the past 10 years. Today we're going to do a little bit of a comparison as well as just taking a look at the gold price in foreign currencies. But the interesting thing about gold is many gold proponents will tell you that gold is doing pretty well. It's just that the dollar is strong. And that is actually a correct statement. It is not correct for silver, but it is indeed for gold. While gold has stagnated in the United States dollar for the last 5 years, really topping out consistently at 1350, 1360. Looks like we're having difficulty topping that again in this mini bull run here. We're at 1334, down about $6. I think it got as high as 1343. So it didn't even get to that 30. Okay, we're back on. I hope that it is still... Hello, Sean, Anton, Ann. Yeah, we're having trouble. We get cut off from time to time. I think we're back on. I was mentioning that last night we were talking about the price of silver in foreign currencies and showing that silver has not done very well in any currency other than the Argentine peso over the last 10 years. Whereas gold, we're going to talk about tonight, actually has done quite well. It's had difficulty in the US dollar, topping the 1350 mark. As you can see, we have approached that in 2014, almost to 1400. But then, since then, 2016, we didn't get past 1360, 1370. 2017, same thing. Early 2018. You can see that line there where we're just not getting past the 1360 and certainly not $1,400. I think we're reconnected. Yep, we're reconnected. I was looking at the chart. I apologize. We are going in and out. I don't know if it's a YouTube issue. I wouldn't put anything past them, but I doubt that. Anyway, it looks like gold has not been able to poke its head above $1,400 for sure, and certainly not 1375, 1380. But that is more a function of the strength of the dollar than any weakness in gold. I mean, everything, all these things they're either trading in pairs, they're trading in relation to each other. But if we take a look now at gold versus some other currencies. Well, last night we took a look at gold, and so I look at silver and the Argentine peso, and we saw that at least in Argentine pesos, silver had reached an all-time high. Well, no different than gold. I mean, gold right now is at 60,000 pesos. It's really irrelevant to look at Argentine pesos because anything's worth more in Argentine pesos today. The interesting one is, though, the Australian dollar. Now, last night we saw that silver was not anywhere near its all-time high in Australian dollars, but it is indeed now at an all-time high in Australian dollars, topping $1,913 as of Friday. And the prior high in Australian dollars was in 2011 when the gold hit a $1,900, $1,911 price in US dollars. Well, back in 2011, the Australian dollar was stronger, and it had only reached a high of $1,800. But if you look at the chart, you can see since 2011, it took till about 2016 for gold to regain that all-time high. And then when it fell, it never really fell below 1,600 very much. And then from 1600 in 2017 and 2018, it crept higher, and it's now at $1900. So gold doing very well in Australian dollars. Those people living in Australia who have swapped out their Australian dollars and saved in gold, they've done much better off. Now, if they'd done that with silver, they would not have. They would have been better off holding on to their Australian dollars for that time period. Here's a longer term chart, I believe. No, it's the same chart. It's just my chart. There it is, Australian dollars. They're both Nick's charts, but Nick made them for me and added my logo there. The gold charts are us, but you can see it a little better. I think the charts he does for me are a little sharper. Let's look at gold in Brazilian reals. And what I've done is my charts go back a couple of years, and then I piggyback off of Nick's other charts that go back 10 years. So let's look at gold in the Brazilian real. Well, doing quite well, 5,200 real. Now, is that a record? Well, we're going to have to go back and take a look at the older chart. We're going to do that right now. But you can see a steady incline, very similar to the Australian. Peaked a couple of years back and fell, but then has since reached, which I believe are all-time highs. And if we look at the 10-year chart, you'll see it. There it is. A steady increase in gold versus the Brazilian real since 2009, even though 2011 looks like the peak in US dollars. Since 2011, you've done quite well, just holding on through that all-time high. There was another all-time high in Brazilian real. 2013, it got all the way up to 3,600 real. Did fall back into the 2,600 range for a couple of years till 2015. Then it took off again. Now remember, it's not taking off. It's the Brazilian real starting to fade, getting its inflationary pressures. But again, it's correlated to gold. And when you put the two together, you see that you are having record value in gold. Even though gold is still gold, it's just that it's going to require more Brazilian reals to buy an ounce of gold in 2019 than it did back in 2011. It only cost 3,400 real. Now it costs nearly 5,200 real. Quite a move there for gold. And remember, yesterday, silver did not top its all-time high. British pounds, even with the weakness in the British pound, well, you can see it. The weakness in the British pound has led to a higher gold price the last couple of years. Right now, gold trading at 1062 an ounce, 1,062 pounds per ounce, and that is close to an all-time high, but not quite. They still have their all-time high at about 1190 back in 2011. The patterns are all the same. You notice they're the same. They go up and down, but it's the extent to which they go up and down. The gold price directionally is correct, but it depends on whether your currency is weaker. And now people think that the British pound has weakened, and it has since Brexit in 2016, and that's caused the price of gold in pounds to go higher, but not quite at an all-time high. Let's take a look now at Canadian dollars. Canadian dollars, also the loonie weakening. Getting close to an all-time high right now. Gold in Canadian dollars, $1,779 per ounce. Let's take a look at the longer chart for gold. And you can see, not quite. 2011 is still the record when it reached almost $1,900, about $1,889, something around there. So we're only $100 off from the all-time high in Canadian dollars. We're higher today than we were at any point since 2011 in Canadian dollars. If you remember the U.S. chart, we're not anywhere close. So you can see the steady decline in the Canadian dollar, but also the relative strength in gold. So again, gold looks like a good bet in all these currencies just to buy and hold. Whereas silver we saw yesterday, not so much. This is a point I'm going to make as we look at some other charts. People insist that silver is just some type of gold and it has similar characteristics because it's money, it's been money for thousands of years. Wrong goes star. It is really not very related at all. Most of gold that's ever bought is is purchased and hoarded and not used. And that's either in the form of silverware or that's in the form of bullion. And therefore, it only moves if somebody wants to sell it. And whereas silver gets used, most of silver is, and people think this is some type of advantage that it gets burned up and then you never see it again. Well, not really. It can be reclaimed if the price is right, but for the most part, the mining supply and the existing stocks are more than enough to handle. You don't hear about shortage. You may hear about them, but they're fake. Shortages in meeting supplies for electronics or solar panels or any other industrial use. And then jewelry, people don't guard their silver jewelry as much. We had Fernando Ortega from Mexico on, and he was telling us that in Mexico, a ring gets a little old, a little tarnished, they get another one. It's not a big deal, and that's because the price of silver is lower. The idea that silver is some type of monetary metal is pretty much rubbish. Silver has not been a monetary metal for a long time. It was demonetized. It's been demonetized for over 150 years. They started with the crime of 1870 where they stopped using the bimetallic standard, and that was set at 16:1, 15:1. But then they left silver in the coinage, and they finally took the silver out of the coinage. They got rid of the silver certificates in 1968. They finally said no more, and they allowed those silver stockpiles to run down. Now the United States holds no silver, at least for monetary purposes. And I don't think any country holds silver for monetary purposes. People like to say, well, you see pictures of the silver in Russian central bank. Yeah, countries have strategic metals. Countries have strategic oil stockpiles. It doesn't make them money. Doesn't mean they put them on the central bank's balance sheet, because they don't. All right, so let's take a look at gold versus... But gold, in contrast, the bulk of gold's value is for holding, for hoarding, for wearing. Silver's is for using. It's an entirely different concept. People think that somehow if there's a monetary crisis that silver is going to skyrocket. And again, I subscribe to that theory, but only in part, because the two times we've had a monetary crisis in the last 50 years, silver has finally spiked as gold was rising, but it immediately dove. It doesn't have the staying power that gold has, at least historically it hasn't. And as we move forward, further and further away from gold standards and further and further away from silver being in the monetary system or silver even being in pocket change, it loses even more of its tarnishable luster. All right, there's gold versus the Chinese RMB. Weakness in the RMB this year, especially because of the tariffs and so on, the trade war. You could see gold making a nice run higher against the RMB. But let's look at the Chinese RMB over the last 10 years. Have not hit the peak. They also hit their peak in 2011, but we are moving up. But again, for the most part, the Chinese RMB has been pegged pretty close to the dollar. When they worry about it going over 7, it's because of the peg. And that's the chair moving there. So it hasn't hit its all-time high either. Now, if China were to allow its currency to free float, then we might see it fall, and then you might see the gold price, quote, skyrocket against the Chinese RMB. All right, now, or the reverse. I don't really know what the direction of the RMB might be. I would think that they have been trying to keep it down. But I'm not sure if it were to free float that it would gain more value, because they've got a lot of issues with their currency. All right, gold in euros. Gold's been going up recently. In euros, gold at 1180 at the moment. It's up over the last couple of years. Let's take a look at the 10-year for the euro. And we see same like China, same like Britain, same like US, not near its all-time high yet, but getting there. But remember, Canada and Australia are either at or near all-time highs, as is the Brazilian real. Gold versus Brazilian real. And here the gold in euros up near close to it, 1183, close to 1200. Gold actually peaked a little later than 2011 in Europe. They had issues with the currency. The currency went down. So gold peaked in 2012, the end of 2012, at close to 1,350 euros. What other currency want to take a look at? Indian rupee. Just another aside, a country having gold as reserves doesn't generally help or hurt its currency. It may help in its foreign position, in its ability to cover emergencies, but Russia's got a lot of gold. We all know that. We report on it monthly. And the ruby is not doing very well. Kazakhstan is half of its reserves in gold, and the Kazakhstan tenge doesn't do very well. Indian rupee, the Indian central bank doesn't have that much gold. They're about 600 tons. It puts them in the top 10, but the rupee isn't strengthened by that. It's not harmed by it, but there's about 24,000 tons of gold in the country, just like there's like similar amounts of gold in China and similar amounts, a little less maybe in Germany and probably a little less in the United States, but not when you include the treasury gold. Okay, so Indian rupee, 93,000 rupees will get you an ounce of gold today. And you can see it's gone up, but it's not near an all-time high. And here's the 10-year chart. It reached its all-time high earlier this year. Well, there you go. Yeah. 95,000 rupee. All right, what else do we have here? Japanese yen. Now, this is a strong currency, if you can believe it. It's been a strong currency, so you're not going to see gold at an all-time high against the Japanese yen. Well, actually, I take that back. It is near its all-time high. Actually, looks like 2013, just like the euro, hit its peak. But it's still below its all-time high. It's at about 144,000 yen. 2011 was not its peak. 2013 was its peak. It's moving up. The reason I say it's a strong currency, and I kind of say it sarcastically, is that country's monetary policy is just a complete mess. I mean, the Bank of Japan just prints yen and buys whatever it wants to buy. All Japanese bonds, it buys ETFs in the stock market. I mean, why that has any value, that currency, I'm just shocked that gold wouldn't be double the all-time high, but I guess it has the carry trade appeal. Now, gold in the Mexican pesos, pretty much close to an all-time high. You can see it's at 26,338. Hit an all-time high mid last year at 27,000. So it's the Mexican peso. What else do we got? A couple of more. Then we're going to look at some other charts. Okay, the Russian ruble. You see, all this gold adding to the Russian central bank hasn't really moved gold that high. Let's not look at this chart. Let's look at the 10-year, and then you'll see what I mean. We'll look at the period of time in which Russia has added all that gold. So here we go. This is the period of time where Russia's added the most gold. And the peak was 2016. We did have that mini run-up in 2016 on the way to Brexit. Reached 100,000 rubles per ounce. Right now it's at about 86,000. Not bad, but still not an all-time high. And the ruble's, it's not that bad of a currency, but see, if a currency is really bad, gold will have already hit its all-time high, which is surprising for the Australian dollar and Canadian. They've really taken a beating the last couple of years for the gold to be higher at all-time highs. Now, the Swiss franc, now this is a very strong currency, and again, like Japan, it's not as profligate as Japan. It's always had the Swiss bankers, and they have a small, strong economy, and they used to have 2,200 tons of gold. They now have 1,020. They have more gold per capita than any other country. Gold is at 1220. They also print francs. They're always trying to weaken their currency because it's inherently strong, but it is not at an all-time high. Their all-time high also, because they started pegging themselves closer to the euro once they joined the IMF. So their all-time high somewhat corresponded with the euro's all-time high around 2013, not 2011. But they're still far away from their all-time high, which is close to, about 1,680 francs per ounce of gold. All right. I think that's it for the... Yeah, well, let's just take a look at the gold and dollar again. And when we saw my chart, but here's the 10-year chart. It's the same thing. You could see 2011 is the peak, not 2013. And then the solid, well, not the solid, but the sharp drop-off throughout 2013. And then these attempts to pierce 1,400 and 1350, 1350, 1350, 1350, 1340 right now. Not quite getting there. I would imagine if you got to see something closer to 1,400, you might see a bit of a spike in gold. In which case, you might see something happening with silver if there seems to be a consensus among traders that silver's monetary, however little it is, value is not being factored into its price, and it's only being priced as a commodity. Because that's where it's being priced today. It's not being priced at any type of monetary premium. Gold always has a monetary premium because that's what it is. It's either investment style jewelry or jewelry to hold on to, or it is bullion that you buy for no other reason than to save it so that you can have value preserved. That's the concept of gold. Not so much with silver. See, silver stackers think that that's the concept with silver, but it's not. It's only 10-12% of overall demand, whereas gold's hoarding demand is 45% jewelry, 40% bullion. I mean, it's like 80 some odd percent hoarding, 80% investment, and silver's is a fraction of that. That's why I say if gold takes off and gets a pure monetary bid higher, not just bouncing along in the dollar range at 1380, but actually gets a bid, then silver will rise, but you have to be careful if history's any guide that it'll just come right back down again. All right, now I do want to take a look at gold long term because this is going to be instructive when we review the gold silver ratio. So a lot of people, they miss this point about gold when they talk about historic gold silver ratios. When they talk about a 16-to-1 and a 15-to-1, you're talking 19th century. You're talking about the United States setting the gold-silver ratio at those points. Those points are 100% irrelevant. The silver is not set at that anymore. Silver is not in the monetary system. It has no need. And that was a political issue. They set it there because there were many Democrats who wanted the gold-silver ratio to be lower. They thought silver was an inflationary metal because you can mine it. When you had free silver, you can bring it into the mint and you can get coins minted out of it. Even though the free market value is lower than $1 per ounce, you can get your coinage stamped, even though the value of the silver was less than the stamp on the coin. Now, I'm not saying that a dollar coin was an ounce of silver was 0.77, something around there. All right, but you really have to disregard any type of governmental fixing of the gold-silver ratio. That's not relevant. Okay, move on from there. You then have to disregard the gold-silver ratio when it was set by government because that's got nothing to do with the market. But then let's look at it from the 20s to the current day. The gold price, because of the classical gold standard, U.S. had set its gold price at $20.67. And there it sits, at least for purposes of this chart, for 14 years. Which means silver is free to go up and go down, but gold can't go up at all. It's stuck because it's fixed. Then 1933 comes along. You see the circle there. You see a little blip up. That's when, in 1933... Franklin Delano Roosevelt signed, Executive Order 6102, nationalizing the gold coins and asking people to turn their gold coins in, and then melting those coins down, putting them in Fort Knox in 1937. And then in 1934, by an act of Congress, the Gold Act of 1934 sets the price by law at $35 an ounce. So you go from $20.67 for the longest period of time to $35. And that $35 an ounce price, look at it, it just sits there. So anytime especially when the 60s, the gold-silver ratio did come down. Why? Well, silver started to become more valuable for industrial purposes. You're entering into the much more modern age. You got televisions now. You got things. There's a good need for silver. But yet, while the silver price is going higher, gold is not allowed to go higher. Gold is set by an act of Congress, the Gold Act of 1934. It's $35 an ounce. And in the 60s, by the 60s, the Bretton Woods agreements that came about in the 1940s, 1944, they also agreed that the gold price would be fixed at $35 an ounce, and foreign signatories to the Bretton Woods agreement, they could bring their dollars to the United States and exchange them. What a bargain price at $35 an ounce. Now, that $35 an ounce was very hard to maintain because while in 1944, the economy was pretty small in the world. The European economies were decimated, or more than decimated. Decimated means 1 out of 10, according to the old Roman traditions of decimation. We're not going to get into that tonight. But the economies were devastated, is probably a better word. And in the Europe and Japan was also devastated. China wasn't a factor. Not much commerce going on in South America. Not much going on in Africa. So the big centers of economic commerce in the 40s, after World War II, were pretty much shut down. So there was plenty of dollars and plenty of gold to meet those dollars. Well, by the 50s, Germany, France, Italy, eventually the United Kingdom, they start gearing up and making white goods and making with the refrigerators. They're making televisions. They're starting to make cars. They're starting to do exports. They're starting to do trades. And they're accumulating dollars in the ordinary course. And so they want to bring them back to the U.S. and get their dollars at the bargain price of $35 an ounce. Well, there were a lot of talks in the 60s about what are we going to do. That's how they came up with the SDR. They figured the United States did not want to devalue the dollar. They did not want to allow the price of gold to go higher. And at the same token, they didn't want to lose all their gold. The IMF came up with this silly SDR thing, basket of currencies, that was meant to provide some expansion of liquidity to the markets because the gold standard was having trouble at $35 an ounce. You had the London gold pool. There were places in the world like the Soviet Union and China that weren't part of this whole dollar standard, and they produced their own gold, and gold would trade at different prices there. Really didn't matter because the two markets were not integrated, the Western and Eastern markets. But it was really a problem having gold at $35 an hour, $35 an ounce. So you can see, since 34, 44, 54, 64, almost to 1974, for 40 years, the price of gold didn't move. So any gold-silver ratio during that period, if anyone wants to say, oh, it got as low as 16 to 1 in 1968, okay. That's because gold, if they had let it go, as you can see when it did let go, it immediately went up to $200. You can see that in 1971. Nixon comes off the gold standard. By 1974, the gold price is $200. They didn't expect that. The actual intelligence on that was, if the United States goes off the gold standard, then gold is out of the monetary system, and therefore there's no need for gold. And what will happen is gold will only be used for jewelry and for whatever else people want to use it for, but the premium, the monetary international finance premium, is going to go away. Wrong goes star. The Europeans said, no, we actually hope the U.S. goes back on the gold standard, and they may even thought about having their own gold standard, and they didn't give up their gold. Those gold numbers that you see when I produced the top 10, top 20, that France and Germany and England, and not England because they did sell theirs, Italy, France, and Germany, Holland, Belgium, those are numbers that they had, but they never got rid of their gold. Switzerland got rid of their gold, some of it, to get into the IMF England famously sold some of their gold in 2000, but for the most part, the Europeans said, no. I don't care that there's no Bretton Woods gold standard anymore. We're still going to hold on to gold. And that's why you see the gold price actually went higher. They expected it to go lower for lack of demand, but it didn't. And then you can see gold, quote, skyrockets all the way up in 1980, all the way up to about $800 an ounce. And then it falls down, and you can see then it made that big run in the 2000s, culminating in the 2011 $1,900 price. Now, this is the important part. So keep this chart in mind here. You can see you've got a period of time where the price basically goes from 1920 to 1974 from $20.67 to $35, and that's it. And most of that time it was $35. Now, if you look at silver during the same time period, it's kind of hard to tell, but if you look at because it was so cheap, it was under $1, but you can see it's moving. It's moving like 35 cents, $1, $2, 28 cents. It's moving. You can't really tell here. But if you look at it from 1920, it's not a straight line. It's moving up and down. But look what happens in the 60s. Due to industrial demand, it goes up. And see that spike in 1969? It goes up to about $2.50. That drove the gold-silver ratio down. Why? Because gold is still stuck by law at $35 an ounce. So I discount anything before 1974 for two reasons. Gold was stuck at a certain price for 80 years, and then before that, they set the gold-silver ratio at 16-1 or 15-1. So those ratios are irrelevant. The 15-1 and 16-1 ratios are 100% irrelevant because they were set by law. So I don't count those. That's not a natural ratio. That's a government ratio. The 1920 period to 1974, if the gold-silver ratio was ever lower, of course it was. Gold was artificially suppressed by law at $35 an ounce. So you can't count that. So when anyone tells you, oh, it used to be, say it's going to go back to that, not unless the government sets it at that, it's not going to. Not unless the government fixes the price of gold and allows silver to float freely and fixes at a lower price, which they wouldn't do. They'd fix it at a much higher price. But now let's take a look at the gold-silver ratio and only look at it since 1974 when gold was set free. The blue line is the important line. Nick made a great chart here, but it's confusing. He's got the gold-silver ratio and the silver-gold ratio. It's very complicated to try to figure out how many tenths of a small percentage of a piece of gold gets you an ounce of silver. So forget the red line. Just look at the blue line. Now, and don't look at the blue line until 1975. And you can see since 1975, go to the far right, you can see that is the gold-silver ratio number. So it goes 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, all the way up to 115 on the far right. If you look to the far right, we're at 90-1. You see that? Okay. That's 90-1. And in 1990, we got as high as about 100-1. Now, look on the chart. Find 16-1. Well, find 15-1. Never there. Never there. Only in 1980 did it come close. Came to 16-1. You cannot count the 16-1 back in 1970. Why? Price of gold was stuck at $35 an ounce, and silver was, getting an industrial bid to $2. You got to start from when gold was set free in 1974, when the price is no longer fixed by law. Now Americans can own gold. 1974. Well, it started out in the 30-1 range, but since the collapse of the Hunts Brothers spike when it was 16-1, it then went up to 35 to 40, and it climbed from 1985 to 1990. It climbed from 40-1 all the way up to almost 100-1, and then when it dropped back down from 1990 to 2000, it essentially dropped from 100-1 to 50-1. Then from 2000 to 2005, it went from 2000. I went to 50-1 to 80-1. Then it went from 80-1 back down to 50-1. Then it went from 50-1 to 90-1. And then in 2011, it went down to 30-1. And ever since then, look to the right, it just runs straight up. So the natural market where both metals are trading freely. Now, trading freely, people will laugh. They'll say, well, there's COMEX trading. Okay, but they're both subject to the same, whatever manipulation there is, whatever opportunities or whatever manipulation you can possibly do in silver, you can do in gold. Maybe more expensive to do in gold. Well, that shows that the gold is more valuable if it's more expensive. And to the flip side, if silver is easy to manipulate to the downside, well, then people could manipulate or use that low price to scoop up a lot of silver and cause a supply-demand dynamic issue and create shortages. That hasn't happened. So you have to say that gold and silver trade equally. They're either equally manipulated, equally traded. They're subject to the same free market or lack of free market dictates. And you can see, if you look at the blue line, the average, I don't have an exact average, I'm going to say it's in the 60s. For most of this chart, it's clearly not 16 to 1. There's no natural 16 to 1. It's spiked in an absolute, when in 1980, that was staggering that silver went to that high. And that was all a result of the frenzy of inflation, of the Hunts brothers. That was a mania, tremendous bubble. Now, 2011, I don't think that was quite a bubble. It did go to 30 to 1, and the price did go to $50, but it didn't last very long. Now, they were able to smack it down, and everybody points to that, and it looked like it was just going to keep going higher. But it's amazing. It's never come back since then. I think a lot has happened, too, since 2011. I think silver has lost some of its... has been some loss of interest in silver, some of it to gold, some of it to cryptocurrencies. Industrial demand is not really picked up since 2011. The photography has gone down. The solar has gone up, but not dramatically. And the electronics have fallen since 2011. So you don't have that big demand push for silver, and you don't have the monetary allure that gold has. And therefore, look at that gold-silver ratio. So some people say, you're cherry-picking, you're only looking at the last 10 years. No, look, the last 40 years. I don't see any 16 to 1 on here. I don't see any something close to some natural 16 to 1, 15 to 1. And then you get knuckleheads telling you it should be 1 to 1, because silver is rarer than gold. That's just nonsense. All right, let's see what else we got for charts. Well, I think it's important to know, that it's very important just to recap, the period of time in the 19th century is irrelevant to the gold-silver ratio because it was set by the U.S. government, the 16 to 1 and 15 to 1 gold-silver ratios. Anything after that, until 1974, you're dealing with government-set gold prices of $20.67 and $35. It's not until 1974 for both, and that's when they introduced, the COMEX futures that same year, 1974-75. That's when they both traded the way they trade. All right. Now, I got a couple of other charts I just want to show you, and then we'll turn it over to your comments. People try to say that this is the silver chart. I want you to look at the silver chart. Silver, for many years, many years, will have a horrific year. Now, have some spikes. I mean, you basically are holding on to silver for the spikes. Look at 1970 to 2018. So from 1970, you've got double-digit losses, 12 and 17%. But then you have these amazing gains, 47%, 61%, 36%. Now remember, these are in the inflationary period when silver has been recently taken out of the coinage. The man on the street does think of silver, at least in terms of cash, money in my hand. They are aware, people, I was around them, they were aware that the money was cheaper and that you had these clad nickel coins instead of silver coins. Silver wasn't considered gold, but it was a hard asset for sure. It's still a hard asset, but the point was, if you had silver quarters in your hand, you put them away. And you can spend silver back then in a quarter form or dime form or $50 form, but you wouldn't do it because there was silver in them. So you had the connection. And you can see, during those inflationary years, big gains, 72, 73, 74, 76, 77, 78, 79. double digits, and eventually in 1979 a triple digit run to 374%. That's what silver did when it was very, very close to the mindset of people of having known that silver was a coin of value. 90% silver coins, it was in people's minds. Inflation is bad, okay? And there's a period of time where silver really had a big run. 1980, it gets crushed, even though it ratcheted up the first 3 months of 1980, but it ended the year 43% down. But look at 1981. It's down 50%. And then it goes up 33%. Then it goes down 17%, 30%. So from 1970 to 1984, you have 6 years. 6 of double-digit losses. Now, you have some of those big gains, but that's telling you this spike and dive characteristic of silver. But then look at 1986 to 1993. It goes down 7 out of 9 years in a row. And 2 of them are double digits. One of them is almost 20%. I mean, you're holding from 1986 to 1993. Now, granted, 1987, you get a 24% pop. 1993, you get a 38% pop. But you're just watching your money go away and hoping for a spike. 9% loss in 1988. 14% loss in 1989. 19% loss in 1990. 8% loss in 1991. 5.8% loss in 1992. You're ready to throw in the towel, and then boom, 38% in 1993. Look at the 94 to 2000 period. More losses, more years of losses than gains. 1, 2, 3, 4, 5, and 3 gains, although you do have a 24% gain one year. Then, in 2002, post-dot-com crash, silver as well as gold starts to move. Silver puts together a string of 1, 2, 3, 4, 5, 6 years in a row, 5 double digits. That's a big period of time for silver, and it's a big period of time for gold. Silver actually dropped in 2008. That drop actually happened, most of it after. Silver was rising in 2008. It actually happened after the stock market collapsed, and then it rapidly regained in 2009, but it lost 24%. Otherwise, you would have had a period from 2002 to 2010 of straight gains. But look at the gains you get in silver when it actually does rise. 2009, 49%. 2010, 83%. 2011, you were going to get an increase, and then it fell off the table. But then look what happens in 2013, 14, and 15. Staggering double-digit losses, double-digit percentage losses. 35% in 2013. 20% in 2014, 12% in 2015, 10% in 2018. Keep that in mind. That is one roller coaster ride there. That is not, people complain about Bitcoin not being a store of value, and I agree it's not because it's very volatile. But this is no store of value. 14% down, 19% down, 8% down, 15% down, 15% down, 24% down, 35% down. Just pick out these numbers. 43% down, 49% down, 17% down, 30% down. That's not a store of value. I don't care if you get these pops here and there. That's not, well, you put it away and you forget about it. No, you put it away, you forget about it. You wake up, it's down 48.7%. In 2013, it's down 36%. That's not a store of value. Now, let's look at gold in contrast. It's speculative for sure, and it might one day outperform gold. But look at the gold year on year. You have, since 2000, only 1 year, 2 years, that you had double-digit losses. You had a 10% loss in 2015 and a 28% loss in 2013. Last year, you had a very small loss. 2017, you had a gain. 2016, you had a gain. Your big loss was 2013 this is against the dollar, when you lost 28%. It also had, just like silver, actually even better, you had gains from 2001 to 2012. 12 years of straight gains in gold. That's store and value. But then go back in the other years. You see far less red, but look when it is red. 1994, 1%, 2%. 1996, 4%. 1997, granted a 21% loss, but then a 0.2% loss, 0.1% gain, 0.5% loss, 5% loss. You don't have the swings. Look at the period in the 80s when silver got crushed. You only had 2 double-digit losses, but if you held on during that time period, you picked up a 23%, 20% gain, and a 17% gain. Now, in 1979, when silver had that 381% gain, gold was only 136. That is the point. If gold catches a bid like 100% gain, yeah, silver probably will double or triple the gain just because people are in a mania and they'll say, oh, it's, and then they start thinking irrationally, oh yeah, silver is just like gold. No, it's not. But that's what they'll think, at least for a short period of time. And then when they wake up, they realize, no, this is too expensive. They use it for solar panels and yoga pants. All right. Anyway, that's a nice looking chart, I think, to show the consistency of gold. And that's against the dollar, too. I have that chart in other currencies, and there's almost no red for gold against those. All right, that's all we have tonight. But, of course, we have time for your questions and comments and see what you think about gold and silver. So, again, I want to say I'm not against silver. I'm against people trying to convince me that silver is like gold and it's money and it's got all this monetary value. It doesn't. The reason I say it doesn't, I don't care about the Roman denarius and paying Roman soldiers and togas and a silver quarter buys a gallon of gas. That doesn't mean anything to me. It's what percentage of the overall silver demand goes into people buying it for investment. And 10-12%. That includes your silver eagles, includes your silver. Now, I will say at this price, it's low. Not because it's low compared to gold, it's just a low price. And I will also say that because it has a monetary component, dormant, latent component, that if gold were to break 1400 and go to 1800, I would expect silver to move higher. In fact, at the beginning of the year, I did predict a silver price over 20, provided that gold went over $1,400-$1,500. So that's still on the cards, in the cards, but otherwise, just silver on its own, it's not going to go anywhere. At least under the current dynamic, there's nothing on the horizon that is a demand driver that's going to push silver much higher. And the technical trading isn't going to push it there because those COMEX traders move it back and forth in a range, as you can see all the time. They don't let it get too high. They don't get too low. They ride it up and then they close out their longs and they ride it down and they close out their shorts. Rinse, repeat. Nothing changes. The only way that gets out of hand is if there becomes a big pop in demand. All right, let's see what you all are saying. There's your Smaulgld fundraising page. If you like this type of analysis, maybe you don't like it. Maybe you don't like the conclusions. Maybe you don't like the tone. Well, then don't tune in and don't donate. If those of you who do, and I know many of you do because I get letters and emails and checks and balances and Bitcoin and Litecoin and patrons and subscribe stars and PayPals, so I do appreciate that. Again, this is not a pumper channel. I try to give you as much detailed information. It's not an investment channel. I just like to analyze this stuff. I don't fall in love with assets. I don't believe in asset adoration. I don't believe that liking silver gives you any type of integrity. I don't believe in any of that kind of nonsense. I think that clouds your thinking once you belong to a silver or gold or Bitcoin or Litecoin adoration society, and then you just get all wrapped up in a hype, and all you want to hear is gold set to skyrocket, Bitcoin to change the world, and so on. All right, let's see what y'all are saying in the comments, if you're saying anything. All right. Anton is here. Yeah, sorry about the beginning. We had troubles connecting. I don't know if I'm apologizing for YouTube or just apologizing in general. We did have problems with that. All right. C. Rodriguez. Smaulgld may be correct to say that compared to the values today, that if measured in cash to gold, dollar, 1/64 billion, 1.6. I don't understand what that is. May it be possible that everything measured in gold has become less valuable in relative terms, or that things measured in gold have become relatively cheap? It's a complicated question, but it depends on what currency you're talking about. The dollar, I mean, this is the other problem that people who like gold and silver and Bitcoin, they keep trashing the dollar and say the dollar's toilet paper. The dollar is the strongest currency on earth. And that is what you pay, and that's what you buy stuff relative to, whether you live in the United States or not. So I think that's a big mistake. That's why it actually almost gives gold a run for its money. I agree with Greenspan. It can compete, but some years it actually does. And that's based on the fact that more people use dollars in day-to-day transactions. It has a use value. That's the thing. Because there's so many of them, that's actually a good thing, because there's liquidity and people need them and they use them, and because they use them, they need them. And it's kind of it doesn't necessarily make it a store of value, but it gives you they always say you want cash in hand or you want some investment. A lot of people take the cash in hand. Why? They need the cash. They need to buy something. They need to pay their bills. They need to pay off a credit card. They need to pay off a mortgage. They need to buy something now. And that's why the dollar has value, because that is accepted everywhere. You talk about a currency. That is an uber currency. You can use that cash anywhere. People say silver is money. It has no currency value. You can't use silver. You got to convert. Same with Bitcoin. You can't really use Bitcoin. There are people like, I'll take it. I'll take Litecoin, and I won't even convert it if you give it to me today. I'll hold on to it for speculation, because no one's going to send me thousands of Litecoin or Bitcoin. But Bitcoin and Litecoin are not really acceptable currencies. You can use them. Even the place where you use them, they use a payment processor. So the point being is the dollar has real value because it works everywhere. Whereas gold, silver, Bitcoin, they don't work everywhere. Nothing is measured in gold. That is right. Everything in exchange for in currency, Sissy Rodriguez. Correct. All right. Ann says we don't use gold as a means of exchange. Yeah, and to me that makes it not money. It's dormant money. You could. I mean, gold and silver we talked about so many times, were the perfect money in the non-digital age. They were divisible. They were durable, they were accepted. But today, no one's going to take or they'll take your Roosevelt dime, but they're not going to give you $1 for it. They're going to give you 10 cents for it. They're going to value it at 10 cents worth of U.S. currency. Gold is very hard. Gold's too precious now to be breaking into dime-sized things and trying to get $120 for them. That's not going to happen. What else do we got? All right. Looks like, unless you put Smaulgld, or unless I'm missing something. Someone asked me a question last night and I forgot what it was. It was a good question. It actually had my name on it and I forgot it. All right. Chrono Trigger fan, too many numbers this episode, Smaulgld. Silver is money, period. That is all I need to know. Yeah, that's what happens when you tune into the pumper channels and they keep telling you that. You believe it. And the other thing is, it's almost to have you believe that because something is, quote, money, that means it's more valuable. I love the palladium example. Palladium is not money, period. It's not money at all. Never was. Didn't stop palladium from going up 7-fold. All right, I can even concede. You can go around saying, but silver is money, and silver is money, and the Roman denarius, and whatever you want to say about it. About money, and it's Argento and the pound sterling. Someone today sent me a thing. Isn't it strange that the pound is called a pound sterling after silver? Yeah, and isn't it strange that cars have horsepower? And what's the point? Yes, we know silver was money. That doesn't mean it is money today, and it doesn't matter whether it's money. Money only has value if it is a usable currency or a store of value. The dollar is the best currency on earth. That's why it's valuable. Gold is a store of value. Silver, not so much. Bitcoin and Litecoin are anomalies. We don't even know what they are yet. People insist that they're stores of values, that they're nothing, that they're currency. I think they're hybrids. I think they're technology. I think they're speculative. But silver, we know what it is. And we know what it was. We know it was a currency. We know it was, quote, money. We know what its demand profile is today. 100%. We know what it is. We even kind of know where it's going. Bitcoin and Litecoin, we don't really know whether they're going to become digital stores of value, digital means of exchange, or they're just going to be ignored. So cryptocurrencies are entirely speculative. Silver is not really speculative. We know what its demand profile is. The only speculation about silver is, will it regain any monetary premium? And the ways that we could foresee it gaining a monetary premium would be if there's some type of EMP or some type of societal collapse or some type of economic collapse where silver is used, probably not by the central banks, but probably as an acceptable medium of exchange. But again, for how long and how likely is that? That's the speculation. Otherwise, we know the demand profile for silver. Unless there's any new inventions that require silver, we know that the electronics demand is unlikely to increase dramatically, because even though there may be more electronics, they know how to use less of it. Same with solar. And we don't even know if solar actually depends. If you have the Green New Deal, which I don't know if you will have it, and the government mandates, and they don't care what the cost is, just get the panels made and get them made this year, and you won't even have time to figure out how to substitute the metal or to thrift it. Well, then, silver might catch a nice bid. But other than that, we kind of know, other than unforeseen circumstances, what silver's good for today. Predicting it's going to be used again because the dollar is worthless, I don't know. That's very... Or that J.P. Morgan's going to buy more silver eagles and melt them down. Someone made a good point today in the comments. All that silver that's supposedly held in storage and hoarded, that's not a good thing for the price of silver. Why? Because the price goes up. There's your overhang right there. Boom. That silver comes right back onto the market, driving the price down. All right. Let's see if we have any other questions or comments. Otherwise, we're going to turn it over to Bernie. Let's see what Bernie has to say. All right. Well, Bernie, you want to give us the 10-second countdown? See if anyone's got any more comments or questions. All right. So one thing about Donald Trump is the man needs to be impeached because... Bernie, we want you to give us the countdown every night. We talk about this and you start trashing Trump, and it's not necessary. Well, the thing is that the Bernie, if you can't get it out, don't bother. All right. So here's the countdown. Subscribe to this channel because Smaulgld is a good guy, even though he's not a socialist, even though he doesn't believe in free healthcare, even though he doesn't believe in basic universal income. Bernie, the countdown. Well, you don't believe in that stuff. No, I don't, but I believe in getting off the air on time. So give us the countdown. Okay, so donate to Smaulgld, send those Bitcoin and Litecoins, and the PayPal, and the Subscribe Star, and the Patreon, and send them checks and money orders. Bernie, no one uses money orders anymore today. Well, that's all right. That's a good thing. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night. Have a good night, Bernie. And have a good night, everyone. Don't forget to get your Smaulgld mugs. Game-changing mugs. Good night.